Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, to discuss inflation risk in the United States and what the return to normal could look like. And Phil, before we get into that, let's talk about where we are with COVID-19 right now. It looks as if the next 4 weeks are going to be a challenge.
Yeah, we can't really tell with the data right now because Thanksgiving's kind of created some, hiccups in whether people were getting tested and whether they're taking themselves to hospital. But the actual hospitalizations hit over 100,000, which is a record, and a really big number of people that are sick enough to be in hospital, especially when we know that around about 20 or maybe less % of people end up in hospital. So that means 500,000 people have got COVID and are quite sick from it. And then also the death toll is starting to rise now. We know that happens with a 4-week lag. So it's not going to be a happy Christmas for some families, which is really quite sad. But it also means there's headwinds ahead for winter for sure.
Now let's talk about stimulus progress, because despite the record new cases, we're still seeing some strength in businesses and employees in the US, at least. Europe, a little bit different of a story.
Yep, you hit the nail on the head. I mean, we've said it a couple of times this week already. It's quite surprising how strong the US has been, even with this new spike in coronavirus cases. Some of the data we were looking at recently from Wisconsin showing that as cases increased, unemployment there increased. We just haven't seen some of the other hard data tracking the market down in the US. Businesses look like they're mostly still struggling, but staying open, and employees are still at work, which is good for the economy. But very different, as you say, to what we're seeing in Europe, especially in Europe with the services sector, which we've talked about before. The services sector is being really much more heavily impacted for good reasons than the manufacturing sector. And in Europe, it's already started to turn back down because of their COVID spike.
Bankruptcies are surprisingly low, aren't they?
Yeah, we talked about that yesterday, and I found some data today just to put in, and it's interesting because it actually shows bankruptcies are low compared to last year, not just falling at the moment. So kind of interesting. I guess 60,000 is the starting point. So that's obviously not just corporates, that's individuals too. And it probably shows that the stimulus is helping quite a lot of people. Obviously, this year we've had some really high-profile companies which hire lots of people file for bankruptcy. So, the news is not quite as good as this chart shows, but it doesn't look like there's a spike in bankruptcies either, which is good news for corporates.
And to wrap up here, let's take a look into the future based on what we're seeing in China and how that could potentially translate to higher inflation risk in the US.
Yeah, so obviously China has been ahead of the curve, so to speak, throughout coronavirus. They had it first, they tackled it very aggressively and pretty much got rid of it. Not quite as well as some other countries, but pretty well. And so their economy got back to normal within a few months. And what you can see now is two things. One, what we just talked about, the services sector in China also took a bigger hit, took a lot longer to recover. But right now, with their economy pretty much back to normal, the services sector and the manufacturing sector are both back in growth mode, and the services sector is pretty strongly in growth mode. So the point of that is, if that's what we've got to look forward to when we eventually get vaccines through the economy, because that's obviously how we're going to solve for coronavirus, we could see a really big rebound in services spending and in services employment. We know already that there's a huge amount of stimulus in the system, which is a whole lot of extra money supply. When people start going out and buying services as well, that should increase the velocity of money. And we've already seen, like, where the segments of the economy are in demand, we've seen inflation. So groceries, houses, cars have definitely seen a spike in inflation. There's no reason really to say it can't happen to services when we all start going back and trying to book our trips overseas or to the beach to actually get back to normal and have a vacation at last.
Can't wait for that, Phil. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.